All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, May 9th, 2022. If you like the content, like the video, subscribe to the channel. If you're looking to keep your head above water in this crazy market and make some money doing it, come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, what a day in the market so far. SPY finally filling the gap. Let's take a look at the daily time frame. We'll pull back to last year. So this gap at 400 spot 61, everybody's been watching it. And I remember very vividly when it was made here. And I said, oh, like they gapped it above 400. I was like, wow, you got to be kidding me. And I said, well, it's probably going to back test it in a couple of days. And then, it'll go. And then it just kept going higher. And we started to roll over here in the month of May. And I said, okay, it's going to fill right now. And it just never filled. And yeah, I knew at that point that, okay, well, the longer this goes on, the more pain it's going to be when this fills, because it's going to happen. And finally, we have filled it here. So over a year, we left that gap on the chart and now finally filling it. So that is out of the way. And that 400 even round number on the spiders, obviously 4,000 on the SPX. We also pierced through 300 on the triple Qs as well. We'll talk about that in a few minutes. And earlier this morning, I said that now that we filled this gap, I actually see a little bit more downside potentially. At the time, I wasn't sure if that meant today or if that meant maybe a little bit tomorrow. And really the reason for that is there's two ways big gaps like this typically work. Either you get really close to it and the market makers pull the rug, or you pierce through it and everybody is sitting there with their orders waiting to buy. Every retail trader is waiting to buy this. A lot of the times the institutions obviously know that and they will flush it through. Basically just take out all your stops, take out all your money, and then we will get some type of relief rally, which I think is coming very shortly. But we may have a little bit more downside tomorrow to this trend line here. So if you haven't been following the channel, this is the trend line I've been watching here. On the downside, going back to 2018, we're now through that 100 moving average and basically into that area. There's a lot of support in this zone. Now, another reason why I think that we're very close to a short-term bottom, there's a lot of them out here, but another main one is the triple Qs. So we're following this falling wedge pattern, and you're now into a major, major buy zone here on the triple Qs. You can see that previous all-time high. And this was kind of your choppy area before we broke out. We made all-time highs. In fact, if we go back even farther, you can see, this was that September little chop there. We broke through this and then back tested it. But in this area, this was a previous all-time high. This got back tested here, and now we're hitting it again on the downside. But take a look at this falling wedge pattern here on the daily going into that. I like this going into tomorrow. And many other charts here. So take a look at the semiconductors inside of technology. Good falling wedge pattern there as well. So seeing the same thing on a lot of these tech plays. And you can see this pivot here that I've got marked going back to last year as well, early January. So that getting tested. Maybe we test these lows a little bit in this area. Maybe it gets a little bit lower. I wouldn't rule that out. A lot of the time when you have a diverging low pattern like this, sometimes you can pierce through that lower trend line a little bit before you start to pop up. But again, we're getting into a lot of really good support levels. Take a look at IGV here. So we talked about this over the weekend, but this getting into a previous all-time high here, and it's testing its 50-month moving average as well. So just getting pierced through that. But oftentimes when you have a lot of velocity, it's very common for you to pierce. So nothing out of the ordinary there, but then an all-time high right there. Also, if you take a 618 from the March 2020 low, and bring it all the way up, you're right into a 618 retrace as well. So a lot of support coming into on that chart as well. If we look at the spiders, we talked about that trend line going back to 2018. Let's look at the Russell 2000. So this one hitting the 50-week moving average. Also coinciding is the 50-month moving average and a previous all-time high. So this is a major area. This is where institutional money was sitting and had to push very hard to break it through that all-time high. So that's typically where the institutions are sitting, and we'd expect some type of short covering here. Now, again, tomorrow we could push through this a little bit more. Maybe we gap down a little bit, but I do expect some sort of relief coming into the weekend here as we start to dip down a little bit here in the last 15 minutes of the day. But I've been showing you guys the put chain for 520, so that will be expiring next Friday. Guys, the market maker, I've seen this enough times, the market makers are not going to pay those puts out. Okay, like I don't care what the news, I don't care what CNBC is saying, I don't care what your favorite FinTwit guy is saying. The market makers are not paying those puts out. There's billions of dollars. This is just like last, March when we had that reversal there. The difference between the last FOMC in March is we didn't have OPEX. So that's why we couldn't sustain that rally here. Plus, I think somebody got margin called here anyway. But in any case, there's people FOMOing puts right now at the lows. Again, they'll probably take us down a little bit tomorrow, probably test that trend line there. If you guys follow the ES, we're basically into that trend line right now. But again, it wouldn't shock me to see 39.50 or somewhere in there tomorrow on a gap down. And then I think we probably rally into pretty much into OPEX and possibly a little bit into the end of the month. And then we're kind of looking for lower highs after that. But this market is so oversold. There's so many bears. There's so many put buying. And another thing, let's take a look at the VIX here. I'm making lower highs on the VIX too. So institutions aren't really loading up on hedges down here. If anything, they're unloading and they're selling puts at the lows to the retail buyers who are basically FOMOing in here as the market drips down. Anyways, let's flip over here and talk about rates. So rates got up to 3.2 pre-market. And it's funny because the last time when we were right here a couple weeks ago, we got up to 3% pre-market and we couldn't, it did pull back a little bit. And then we made obviously we got through it, but we pulled back in before the market opened this morning. So we technically touched 3.2, just didn't do it during market hours. So that makes me wonder if maybe we pull back a little bit, then touch 3%, or maybe we just gap up tomorrow and touch it and then reverse. But I think essentially we're about topped out here on rates. Again, basically everybody's seen this by now, but this was on my radar all last year here. Inverse head and shoulder pattern, and that target is about 3.2%, just roughly, and that's basically where we got to. So rates should be topping out here. That should give some sort of lift here to the markets, especially tech that's, just really tired of this rate trade here and tired of the inflation trade altogether. Doesn't mean it can't go lower, doesn't mean the markets can't go lower, but market mechanics matter, and I think we're getting close to that point. Anyways, HYG, I told you guys over the weekend, 77. We're through that now already. So we'll see what happens tomorrow. Again, a lot of support, though, in this zone here. It is oversold, but again, the bond market's talking to us here, and we got to respect that. HYG breaking through that 77 handle today. We'll see if we get a little bit more downside tomorrow morning. Interestingly enough, take a look at home builders here, XHB. This actually just turned negative. It was green. Right before I started this video, same thing with ITB. This was just green before I started this video, which I find very interesting. So you got bonds, the TLT here, green, off that reversal, and home builders are starting to reverse. So maybe a little bit of confirmation there that rates are starting to top out a little bit, and maybe to give some relief to these home builders, which have just been slaughtered after really the bull run in rates here. But overall, possibly a little bit of a bottoming signal there. Let's take a look at VNQ. This one's getting roasted today, losing that pivot low there. We talked about, thought there should be good support in that area. We already kind of bounced and hit it once. Again, it is still very oversold, but these REIT stocks are getting smoked here. Is into that 100-week moving average though, so maybe you can get a bid here tomorrow. 3 weeks down straight into that. So we'll see what we get out here after that, but pretty big hit there on VNQ. Now let's flip over to XLF and talk about fins. So again, like a lot of other things, coming into a good weekly level here, you got the 100-week moving average. I also have the same kind of cycle count that I talked about. At least I think I talked about it. I know I talked about it with members, but same cycle count that I have on the spiders and the triple Qs and the Russell 2000 and pretty much everything. So XLF looking good here on a relative basis. It's still holding this tail candle here, and you have this downsloping diverging low trend line here. So again, oversold, has a good chance to rally here, and actually fins are holding up reasonably well, believe it or not. XBD is much worse, and that is because HYG is lower. So these guys love those junk bonds. When junk bonds go down, broker dealers take a hit. But again, this is your chop area. It is into a support zone. So we'll see if it can get a bid by the end of the week. It's only Monday. And again, OPEX next week. That really says to me that given how oversold we are, we're probably likely for some type of relief move. Another thing, let's take a look at crude. Crude taking a huge dump today. So down almost 7%. What can you say? This is not bearish for the market, right? So crude oil coming in is not a bad thing. And again, Now we've confirmed lower highs, essentially. We thought we had them here. We weren't sure because we were kind of chopping around, but this looks like a big dump right here, and crude prices possibly coming down. Also, little tidbit here, take it for what it's worth. Jill Biden, excuse me, did visit Ukraine over the weekend, and now all of a sudden we're randomly seeing crude and nat gas get absolutely barfed here. Look at nat gas down 13%. So this is set for that previous all-time high again, or not all-time high, but previous high again, and probably won't bounce until that 50 moving average. That thing's getting roasted here. So maybe someone knows something about the markets here, and maybe there's sometime now. Russia does have its little victory day thing today. Putin is in for cancer surgery. That is the rumor anyway. So I don't know. Again, just take this for what it's worth, but something to at least consider for sure. And again, why is nat gas selling off sharply? Why is crude selling off sharply? Why is gold down so much today? Why is copper down so much today? And then you have TLT, which is green. So I think there's something to this rate thing. So we'll have to keep watching. Maybe we'll get news tomorrow. Maybe we'll get later this week. I definitely expect some type of news during OPEX week because they're going to use the news to push the futures around. But overall, yeah, just a little bit of a tidbit there. You see the XLE here getting hit really hard, down 6.5%. OIH coming all the way down to that daily 100 moving average, down 11% on the day. Big move down there on OIH, and XOP also getting hit, but still above this tail area here, still down 11% on the day. So big dumping going on here in some of these energy names. You can even see Camco, uranium's play, getting hit really hard as well, down 11% there, or excuse me, 13% there on the day. This is coming into some support though, but man, what a collapse though off of the highs in energy. Dollar index is holding up, did hold up by the close here, so can't really make too much out of it though. It is overbought. It does need to do some backing and filling and consolidation, but overall it's holding up and hanging in there. We talked a little bit about gold. You know, again, this still maybe hits down to that 200 moving average there. Let's take a look at the weekly. Yeah, so the weekly's got support 50 and 100 moving average on the weekly. So, you know, maybe it has a little bit more downside, but and it is getting hit today, but it's holding up okay. The chart you guys are probably all asking about is GDX. So this is into the buy zone now. And, you know, this is another one that's into a good support level. I do like GDX down here around 32 bucks. Maybe it pierces through it a little bit tomorrow, but this is actually not a terrible look there of support on GDX. So if you want to take a stab at it, now would be probably the time here. Just don't overload yourself in any position right now. Silver here, what can you say? Just getting roasted. I mean, it's just getting spit roasted at this point. Probably does make a nominal lower low here, and they'll probably save it at double bottom in the meantime, but just getting crushed here, just absolutely getting crushed on spot silver. And it's another commodity that is down here with bonds up. And I don't know, my antennas are going up here. There's something fishy's going on. And, you know, when I see that, I got to alert you guys of it. Anyway, so we talked about copper getting hit. This is probably headed down. No, this is headed down to $4. It is off the lows, though. So we'll give it the benefit of the doubt for now. Platinum having a little bit of a flash crash, but coming off the lows. And palladium, you know, I told you guys that over the weekend, a lot of time you see these wedge patterns. The first hit's a false break, so maybe it did. You know, maybe they did save it a little bit here today, but overall, you know, in a little bit of a weak technical position, won't make too much more out of it than that. All right, let's get to it. Everybody wants to know about crypto. So crypto falling knife today. I did my video yesterday on this. Look at the volume there. So a lot of things getting dumped here, and crypto is leading the market lower. Now, here's the thing. It's coming into a major support level here. Major here on Bitcoin. You've got this pivot low. That's where you reversed before you broke out. And then, of course, these pivot lows down here. So 28, 30,000, that's going to be your buy zone. And this is another level. So I was talking to you guys about, you know, XLF, Russell 2000, IWM, the triple Qs, the semis, spiders, those trend lines, they're all coinciding with these lows here on crypto. So again, is this a absolute, you know, epic beatdown? Yeah, absolutely. Especially considering it basically touched 36,000 today, and before reversing lower. And here's Ether breaking through this trend line. So that is an active head and shoulder pattern there on Ether. So Ether could have a lot of downside here. Now, a lot of the time you'll have a break and a back test. We'll see if it fails. It could fail, and it's also a weekly pattern, so it can take it a full week to play out. But obviously crypto taking a huge hit. There is a lot of support down here though. So we'll continue to watch that. And again, I think the markets in general are into a lot of good support, and there's a lot of cycle factors that I've been watching very closely over the last week or so that are starting to trigger here, and market's starting to reverse here. So maybe they took everybody's stops. There's about 5 minutes left in the day. Maybe they took everyone's stops out, and I've been talking about the lack of liquidity. They're trying to, I can see the institutions trying to get filled in the dark pool, and they just can't. There's just nothing there. So maybe they, you know, every retail trader and their mother probably bought that gap fill thinking like, oh, it's the gap fill, so it's gotta go up. But when you see that many people looking at the same level, a lot of the time they'll try and flush it below that. We did get down. Geez, let's see, we got through 397. So let's see. Yeah, Spiders got down to 396.50. So maybe that's enough. We'll see. Maybe that's enough for tomorrow. This market might need some news, though, to push it higher. But in any case, to wrap it up, we're very, very close to some type of a very good tradable bottom, I think, at least for a couple of weeks here, at least into OPEX, maybe a little bit after that. That is kind of the thesis that I have moving forward. But be very careful in this market. It's not a game. This market can turn on a dime, and we're obviously not seeing any sort of sustained rallies, but I think we are very close to getting one very shortly. Anyways, guys, market's wrapping up here in about 3 minutes, so I'm going to wrap this video up. Come find me on carnivoretrades.com. Follow me on Twitter. Subscribe to the channel. Do whatever you got to do, but stay safe in this market. You guys take care, and I'll talk to you all tomorrow.